Are you thinking of buying a home or know someone who is? Keep listening as we list all the things you need to know before you sign on the dotted line. Hello, and welcome to the Wealth Minded MD podcast with your money best friends. I'm Dr. Alicia Taylor.
And I'm Dr. Brittany Halford.
And of course, we're here to help you build wealth and make good money decisions so you can create the life you desire with more control over your time.
Alicia, can we talk about one of the most important money moves we've made as doctors? And I don't know about you, but for me, when I think about this, it's actually insurance. Yes, I know it's not sexy, but it is absolutely essential, especially disability insurance.
Facts. I got mine right after med school, before residency even started. And let me tell you, Prati Botto at PKA Insurance Group made the whole process so smooth. He actually cared, broke down everything, explained the fine print, and got me the best policy for the best price.
And what I love is that he treats everyone like that residents, attendings, even docs on visas. He literally got you. He's super responsive, super knowledgeable. And if there's a better deal out there, he will tell you.
Oh, and if you're healthy, you could get approved for up to 10 million in life insurance. So not just disability insurance in only 5 minutes. No labs, no hassle.
So if you're serious about protecting your income and your family, call 1-800-258-1018.
Or email pradeep at pkainsurance.com. All right, Brittany, it's been a minute since we've connected. What is going on over there for you in Boston?
Leisha, so many things. And so I'm trying to decide which thing do I want to share. I guess we'll start with KJ's birthday party. We had a birthday party at the house yesterday. And I am not one who loves to host. So anxiety was on 10. I was trying to clean. My help was fussing at me. She's like, look, you don't clean and decorate and host a birthday party on the same day. You need to clean on a different day than you're hosting your birthday party. But it was really nice because it was a rainy day. My kids are born in spring and fall. And so I never know what flavor of weather we're going to get for the birthday party. I think it could be more traumatic for them to have to change the date. So I typically try to choose locations which have indoor versus outdoor options. The weather was predicting rain. And so I was hoping we could move it to the park if it was predicting sunshine and warmth, but it was predicting rain. So I had to clean out and organize the garage. And I'm just grateful that we have a garage that we can host a party in. And it went really, really well. But at some point during the cleaning process, I just looked at the mess and I said, would I be upset if I threw all this stuff away? And the answer was no. And I just got a trash bag and started throwing toys away. And the space looks so clean right now. I am just very grateful.
So maybe this is also like a muddy confession that you just threw away toys that were in good condition because you were like, you know what? I want my garage to be clean. So I'm happy that my kid had a good time and now it's time for this stuff to go. So we're going to call that decluttering.
Yes.
Well, I'm happy that that went well for you and happy belated birthday to your son.
Oh, thank
Happy
you.
that went well.
Yeah, it just, as we're talking about home buying, right? And should you buy a home and all of the things to know, I am grateful that our home afforded that opportunity, that I could play it by ear. Is it going to rain? Is it not going to rain? And if it will rain, I don't have to change the date. Yes, I have to change the plans, but my kids won't know the difference. And it's because we purchased a space that could accommodate us being in our garage. And it actually did not feel like a garage party. Yes, there was some storage, but we also had decorations and the kids had enough space to run around without everyone being cramped.
Okay. So what I'm hearing is you purchased a home with a garage that gave you the space where you could throw parties. I am still living in my apartment, so I wouldn't know what that feels like. I'm happy that your home is working out for you. Do you have any money confessions for us? I guess any more confessions for us in regards to that home?
Okay. This is one of the things that when we go through our journeys, we learn different things. And so I'm kicking myself a little bit because I could have saved thousands of dollars while also just being grateful that I found out this now. So when you purchase a home, you have to pay property tax. And depending on your city's regulations, there may be different rates for those property taxes. You might have a residential rate if it is your primary residence, or a commercial rate if you're using this as a real estate property or something like that. And And what I did not realize, one is that I knew that there was a difference, but I didn't pay attention to the details of the difference. So, where we live in Boston, there is a residential cap for property tax of like $4,000, which is significantly less than what we would normally pay. Typically, if it's the regular rates, you pay about 1% of your home's value in property taxes every year. And so to be capped at about 3 or 4K is much lower than what we would typically pay. Let me just say that. I was not aware. So we own two properties within like a mile distance of each other. And for the first property that we owned, we paid significantly more property tax in because it was our primary residence. I didn't realize that it had been kind of already transitioned to that commercial rate because we first lived in it as tenants. And I didn't transition it back over to a primary residence. And no one told me that I should or I had to. And I just didn't pay attention to the details. So there's a little bit of nuance here with the process. You can't do it your first year of living in the home. You have to do it your second year unless it was already in this residential state and then you acquired it as a residential state or you acquired it as your primary residence. But both of the homes that we purchased were used as rental properties before we purchased them. So they were already established at the higher rate. So you have to go through this transition. And I wasn't aware of that. Thankfully, now I am, right? And so I've submitted all the documents for our new home to be at the lower capped residential rate, but I could have saved thousands of dollars in past years on some property taxes.
Is there a way for you to rectify it? Maybe submit an amendment and get like a reimbursement from the state? Or they're like, nope, it's your fault. Sorry, we're going to keep the money.
I didn't ask specifically, is there a way that I can retroactively submit for reimbursement? But the sound of it when I spoke with a representative was no. But I'm actually going to go in and talk to them and see if there's any type of amendment. But my assumption is no.
Okay. So as someone who doesn't own a home, I did know that there was this thing called property taxes that you have to pay. And I think, to be honest with you, Brittany, one of the reasons why I haven't yet purchased a home is because there's all of these other fees associated with buying a home and maintaining a home that, in my opinion, as an outsider looking in, can add up quite quickly. You know, you've told us about different repairs that you've needed to make to the home that have not been cheap per my standards, right? Thousands of dollars each repair, and there's been multiple of them, right? Property taxes. It's like, oh my gosh, I already paid for the home and now I have to pay taxes on the home each year. It seems like in your state, the residential rate is capped, so that's great, but that may not be the case in every state. And there's also homeowners insurance and all of these other things. And so I'm a little nervous about taking the plunge because it seems to be that there's all these fees associated with it. So I wondered, thought it would be good for us to kind of do an episode today, more so catered for people like me, centered around things that we need to know before we take that plunge, things that we need to know before we buy a home, or in some people's case, buy another home.
Are you ready to negotiate like a boss? Let's be real. Most employees don't negotiate, but their employers expect them to. That means you're literally leaving money, benefits, and flexibility on the table.
But not anymore. Just as our client, after going through the Negotiate Like a Boss Accelerator, she landed a big salary increase, the schedule she actually wanted, and more time to spend with her family and pursue her passion.
You'll get proven scripts and tools to negotiate with clarity and confidence, live hot seat coaching to practice and perfect your pitch, and real-time feedback so you're not guessing, you're growing.
Because, like I always say, I work better when I'm paid well. Don't wait. Procrastination is a pricey mistake.
Enroll in Negotiate Like a Boss Accelerator today. Click the link in the show notes. This opportunity will not be around forever.
As physicians, one of the most important things that we can do is make sure that we secure our income, because a lot of our financial plans are contingent on our high doctor income. One of the things that you will need to do is make sure that you get long-term disability insurance.
Now, Pradeep and his team at PKA Insurance Group have a reputation for putting people over profits and always doing what's best. Do not hesitate to email PKA Insurance and his team today.
They will help you get the insurance you need with the service you deserve.
Leisha, I'm so glad that you always challenge what is the standard quote, because I I think a lot of people have this perception that home ownership is the pathway to wealth, and it's not always for everyone. And so I think you have many justifiable reasons of not wanting to purchase a home from both the financial perspective and then also from a psychological perspective, because these changes sometimes be stressing you out. My goodness. So I'm so glad that you suggested that we talk about this again. I know we've done prior episodes, but things are changing in the residential landscape as well. I think the first thing to understand when you're purchasing a home is that you have to submit a lot of documents, and you want to try to gather these documents ahead of time so that there's no delay in your application and processing your application, especially if you've already started to look for homes or you have this itching desire that this is the right time for you to do this. You want to ensure that you do this quickly, and you've already set your mind up that you're going to purchase a home. So, getting the documents together is really the first step. So, I would say some documents to consider are 2 years of your W 2s or your tax filing from past years. So, like your 1040 forms from past years, because basically they want to show proof of stable income in the past and then also to show proof of stable income now. So you want to have your most recent pay stubs, usually like in the past 2 months. They also ask for a lot of bank statements. They want to know how much is in the bank now, what are some of the big transactions that came out, even credit card statements, and then your ID, your social security number, and any additional loans that you might have would be really helpful. If you have any side hustle income as well, then they want to see the profit and losses from those side hustles or additional streams of income.
Wow. Okay. So this is a lot of stuff, especially for someone like me who has multiple credit cards because I do travel hacking and that sort of thing. Do you have to print out the statement from each credit card that you have?
Essentially, if you have your credit cards, I think it depends on your debt to income ratio, but that's basically what they're trying to calculate. And so they want to know as much information as possible. So I can give you a scenario when I started to broach this idea of let me get the credit cards for travel hacking. I was determining, should I open the credit card now or should I wait? And for one credit card, I opened it after I had submitted my application and had been approved for the application, and we were farther along in the home buying process. But then they did another soft credit check or credit report, and they saw that I had opened up a credit card. And so then I needed to send the statement for that new credit card that I thought that they were never going to see to them. So they could be very particular about the documentation and how long ago that documentation was and all of the logistics. And you have to verify if you made a payment or not, if the balance, it's a lot, actually. It is a lot.
So if I have, I don't know, 5 credit cards, which I have more than that, but you have to print out the statement for each credit card or only if you carry a balance on each one? Like, what are they looking for? Just your credit history or just trying to see what you charge on a monthly basis? Like, I'm not quite sure I'm understanding.
So they want to see your credit history. So any credit cards, definitely that when they pull it, there's a balance if you've submitted a payment or not to verify that it had been paid off. Because basically, I think what they're trying to calculate is, yes, your credit history that they could get from your credit report, but also looking at your debt to income ratio and also understanding where the payment is coming from. So, like, did you pay that off yourself? Was it cleared by the bank? So they ask for a lot of nuanced stuff, and I don't always ask exactly what they're looking for, but that's my understanding is debt to income ratio, credit history. That's why they pull the credit report, and then understanding like who's paying off the credit cards and things of that nature to ensure that there is proper income.
Okay. Okay. And what about for those who are having a change in income? Maybe you used to make a lot more in the prior year, but this year maybe you took a maternity leave or you were in between jobs for a while. Or maybe for physicians listening, let's say you go from trainee to attending. And so there's a drastic increase in your salary. Like, how does that factor in? Do you have to be working for a long time? Do you have to be working for 2 or more years at the higher salary? Like, how does that work if you've had changes in income?
Yeah, so I think it's all about the narrative, right? So you want to just explain and justify that. So if you're taking maternity leave and you're submitting your recent pay stubs, and so the most recent pay stub shows nothing or it shows that you've decreased your time, say, for example, you go part time, but you have the intention of going back to full time in a couple of months, then you just want to justify that and describe that to them as a story. And then as far as your past income showing with your tax forms or your W 2 statements, and now you're going to have an increase, then you could show like an offer letter that you have if you haven't started that job yet, but you have the offer that then you can justify or verify your new higher income with that offer letter.
Okay. Okay. So we're showing our income. And just for a point of clarity, if you are buying a home with someone, whether it's your husband, a partner, a friend, or whomever you're buying a home with, both of you need to submit all of this documentation about your income and credit card statements and tax returns and all that stuff.
Yes, both. And we drive losses through a lot of things for tax savings. It's legitimate losses. But when they're reviewing like the P&Ls and they're like, hey, this company is losing money, then you also have to explain like why you're driving a loss or how you're driving a loss. It's a long process, but it's worthwhile once you get your home that you love.
Okay. Can you explain to our listeners what driving a loss might mean?
Yeah. So when we have businesses that we use and we're able to deduct certain personal expenses and other expenses as business expenses. So when you're able to drive a loss, it's not that you actually have a loss in your business that your business is not making money. It's more of a paper loss that you've shifted income elsewhere or you're taking depreciations as deductions. And so it might look like your business is not making that much money, but you're actually making money. But for tax purposes, you've taken all of these deductions that it looks as if your business has not made as much money because the deductions are greater than the revenue that has been generated. So, for example, if your business makes 50K, but then you're able to depreciate some of the equipment in your business that looks like you lost $75,000, then it would show that your business actually lost a total after you have the depreciation deducted from the revenue. So 50K minus 75K, then it looks like your business has net loss of $25,000. So if somebody is reviewing that, the underwriter is reviewing that, then it looks like your business is losing money and not producing income, but you actually have more income. It's just that you took depreciation from some of the equipment and other things within your business that makes it appear that you lost $25,000. I hope that that makes sense.
Okay. So what I think I hear you saying is even if on paper it looks like your business is not profitable, you're going to have to explain why it may not be profitable. And so when you say you're driving a loss, it means that you are on paper showing that your business is not as profitable as it truly is. Am I understanding that correctly?
You got it.
Oh, I wanted you to explain this because I think that it's helpful for people, especially who are business owners and entrepreneurs, because oftentimes they try to quote unquote drive losses, right? Or depreciate things, right? Because they want to pay as little in taxes as they can. What they may not realize is that may harm them negatively when they're trying to purchase a home. Because on paper, it's going to look like your business isn't that profitable. So then the bank is going to wonder why they should loan you all this money for a home if your business isn't profitable. And so it's kind of one of those catch-22s where you have to weigh the tax benefits versus how that might affect you from getting a business loan or a home loan standpoint. So I think this is really helpful for people because there are a lot of physicians who are starting side gigs and side hustles, and some of them may be substantially profitable, right? There are other physicians who do locums work, so maybe they are paid like a 1099 contractor. And if that is the case, they're probably writing off some business expenses. Maybe they have a car that they purchased for their home. Maybe they're using a home office or whatever the case may be. And so just keeping those things in mind, right? If you know that you're going to get ready to buy a home, then maybe you want to be a little bit more diligent and a little bit more thoughtful about what things you write off in the year prior.
And again, I think it's both and, right? You can still purchase a home and drive a loss on your taxes while owning a business. It's all about the narrative. And so that was one of the things that I had to explain. I had to provide a profit loss statement so that they can see the actual income that is coming in and also the deductions. And we were able to explain that.
Gotcha. We talked about getting all of these documents, but let's take a step back. When do you get these documents and who do you give them to? Is this to get, quote unquote, the pre-approval to purchase a home? Is this, if I'm starting out and I'm like, okay, I want to buy a home, I'm just gathering my documents at home, keeping them maybe in a zip folder or something. And then once I get them together, what do I do next?
Yeah, so this is not for the pre-approval. The pre-approval process is pretty simple. I had to send over our IDs and then give them permission to run a hard inquiry credit report. And then after that, we were able to get a pre-approval letter. So as long as your credit is in good standing and you have a driver's license, give them your social security number, the pre-approval process is quite easy. Your real estate agent will want that before you start to go and see properties. But this is what I'm saying. Like once you found a lender, right? You've interviewed your lender and you found your home, then this is where you will start to to upload those documents. So usually it's on a portal with your lender and you'll send them over all of these documents. Sometimes they email you, but oftentimes it's through their portal and they have a list of tasks that you'll walk through for the application. You have to upload all of these documents.
Okay, so if we are, in order to give a pre-approval for a certain amount, don't they need to know how much you make? So you just like tell them, I guess, what in your case, you and your husband's salaries were and how much income you brought in. They did a credit report and they said, based on what you told us in this very simple form, this is how much we're going to pre-approve you for. Is that what you're saying?
Yeah, yeah, yeah.
Okay. Do you need to get multiple pre-approval letters from multiple lenders?
No, you just need one lender for a pre-approval letter in order to go and see properties with your real estate agent and also even to if they submit an offer, but then you want to shop between who do you want as your lender and then that one lender that you're going to be working with and using for the mortgage, that's when you'll upload the documents just to the one lender's portal.
So if you are new to the home buying process as I am, and you're like, okay, I want to buy a home. I think I'm in a financially stable position and I want to do so. You can just find any lender, it seems, and get a pre-approval letter by a simple process. But then if I'm trying to vet different lenders, right? Maybe I want to go with this bank or that bank or this bank or another bank, or maybe I want to consider a physician's mortgage. And so I need to go to a specific lender. How are you interviewing different lenders? I assume all of these lenders are going to do a hard credit pool. So I'm just wondering like about that process.
So for me specifically, I sent an email to various lenders. It had information regarding who we were, what our type of employment was, how much we made, our net worth. That was probably about the information that I had included about ourselves, just an initial email. And then I asked them what type of physician loans, because we were specifically looking for a physician loans, what type of physician loans they had to offer and what were some of the details of that. So then after that initial email, they typically corresponds with, okay, we have this physician loan. It might be a 10-year at this interest rate, a 15-year at this interest rate, and then a 30-year at this interest rate. And this is the required down payment for each of those loans. After getting that information from all of the lenders that I sent the initial email out, then I did my own appraisal. Okay, which of these lenders has the best loan type and offer? Also, you want to ask if they sell the loan or not. That's really critical because the person that you may initially get as your lender for your mortgage may not be the last person that you'll be dealing with for your mortgage. And for me, customer service was really important. So I just wanted to make sure that the company that I start this mortgage with is going to be the company that I end this mortgage with. So understanding that if they sell the loan or not. So those were some of the questions in my initial email. And then after getting all of the interest rates and different types of loans that they're offering, then I basically appraise those and I look for the best product that they have to sell, typically valuing it by the interest rate, but the interest rate alone is not the most important thing. Also thinking about how much of the down payment is required. And the last thing that I was considering is, did they have any rate adjustment programs that were already in place that would allow me to change the interest rate or submit an application for a modification of the interest rate without me having to go through this whole refinance process. And I think I shared that on past episodes. So those were the most important questions to me. Then I got on a call with them and I wanted to know, okay, how are they teaching me about this? Because there are going to be questions that you're going to have as you go through this process. I mean, it's a long-term commitment and you want to ensure that they can explain it to you in a way that you feel confident and not overwhelmed in talking to them. So there's one lender that I was asking about points and buy downs. And I was more confused when he explained it than when I started. So I was like, okay, well, I don't know if I want to work with him or not. That's kind of the initial steps that I would recommend for anyone is really just getting the interest rates and understanding what is the down payment and then looking and speaking with the loan officer to understand what type of customer service they have and what other products they may offer.
Okay, that was a lot. So let me make sure that I got it, right? So you're thinking about buying a home, you first need a pre-approval letter because the real estate agents aren't going to show you homes until they have proof that you can actually afford a home. You know, you can pick a lender, answer some simple questions online and get that pre-approval letter. But then you have the task of actually choosing your lender. You know, maybe the person who gave you the company or the bank that gave you the pre-approval letter is not the one that you want to go through. And so what I hear you saying, Brittany, is you sent emails to various companies and you said, hey, you know, introduce yourself, told them this is my net worth, this is how much income I have. And you asked them some very specific questions. Do you all offer mortgages? What mortgage products do they have? What's the down payment? What's the interest rate? Do you all sell the loan? Do you have any mortgage readjustment programs? And it sounds like a lot of questions, but I presume that these people are used to getting all these questions. And then different lenders that you sent that email out to responded back to, and you were able to basically compare and contrast. Oh, this product looks good. That product looks good. Once you found one or two that you liked, you hopped on the phone with them, right? Got a feel for their customer service. Can I actually understand what they're saying? Do I really want to be in a relationship essentially with this company for the next 20, 30 years? And then it seems like you went from there. Okay, that's a lot. I think I tracked. And then, once you choose one, obviously there's a portal. You're going to upload all those documents. We talked about tax statements, credit card statements, proof of income, all that stuff. One of the things that I think would be helpful for me to understand next is how much money do you have to have in order to really start this process and end it with the outcome that you desire. So let's talk about a little bit about what kind of money is required.
I think a lot of people feel and believe that the down payment is the biggest cost. Like that's the only thing that you have to save for. And yes, you do need to save for a down payment. And the amount of down payment is going to change depending on the type of loan and the lender. There are some zero down payment loans depending on the type of loan, right? So that is one thing that you must consider is like, what is the down payment? In addition to that, you also have to consider your closing costs. And your closing costs include things like the inspection, things for the underwriting of the loan. You also have to think about title insurance, the attorney, various factors that are included in your closing costs. And typically those are about 2 to 5% of your home price. Sometimes lenders may also require that you pay some of the property taxes up front before you purchase a home, or that's included in this whole cost for a purchase. And depending on the type of loan that you have, you may have to pay for some private mortgage insurance to ensure like a conventional loan if you have less than 20%. And then lastly, you have to think about your escrow costs. In my experience, we didn't have to add more to the escrow account in this whole purchase at the time of purchase, but that's one of the things that we know that our mortgage amount, some of it is being put into escrow, and escrow basically is like a holding account for upfront deposits like taxes, insurance, if that's going to be paid by the lender instead of you paying them individually.
Wow. Okay. You kept listing costs, and I'm thinking, is she done yet? Is she done yet? Is she done yet? I thought that the money for the escrow account was included in the 2 to 5% of the home price. So you're saying that that does not include that, and you still got to put money in the escrow account for upcoming taxes and insurance?
Yes, 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 yes. So you fund also part of your escrow account kind of throughout the year.
But that's not included in the closing costs.
I'll have to look actually on my last closing documents to see what portion of that was included in the escrow, but not all of it, no.
That's a lot. I'm adding this up in my head because I'm thinking, how much is she talking about? So if someone was thinking about buying a $500,000 home, which in some places of the country, that's laughable. That would get you nothing but like a shoebox. In other places of the country, that is plenty and can get you a 5-bedroom, 3-story house. So it really depends on where you live. But let's just use $500,000 for easy math. So you have your down payment, which for some of these mortgage programs can be 0%. For other people, it might be up to 20% of the cost of the home. So if we're buying a $500,000 home, you could put down 0, or you could put down $100,000. Am I doing my math right? Because that seems like a lot.
Yeah,
Oh, wow.
$100,000 for 20%.
And then we have an additional 2 to 5% of the home price. So then we have an additional $10,000 to $25,000 just for closing costs. And then we have extra money for escrow. So that just seems like I'm priced out. Seems like maybe a lot of doctors may not have to put down that down payment. So it's just the closing costs. I'm saying just as if 10 to 25K is not a lot of money, but I think it's just a little bit more than I was expecting.
Yeah, I mean, there are a lot of costs to purchasing a home. I'm just pulling up our closing documents from our last home purchase. And yeah, there's a portion of the escrow that is included in the closing costs, but then there's that added escrow that you have to pay on a monthly continual basis. And then they'll calculate all of the closing costs and then the cash to close, which includes the remainder of your down payment that you might have to pay at the time of closing. But I hit most of everything that is included. It can be a lot. It sounds a little overwhelming. I think it's one of those things that people might be shocked about. Also, one of the things to remember is that some of this stuff can be negotiated. So when you work with a lender, they might have their own real estate attorney that they're going going to charge you the fee for. But I had a specific real estate attorney that I liked. I knew she did a good job. I knew she was affordable. And so I was able to use her and decrease on some of the closing costs for the attorney fees. Typically, the underwriting fee is standard. That's not anything. And that's going to vary from bank to bank. So that's one of the things that I guess you could ask when you're sending out this email is like, what is your initial underwriting fee? Because that's going to vary from bank to bank. There are a decent amount. Some of it are things that you can shop for to reduce the cost. And I've definitely done my due diligence to do that. Some of the things are just going to be standard. And you just say, okay, I got to incorporate this and I got to pay it.
Okay, that's easier said than done. So let's talk about ways to reduce some of this. Okay, so we talked about all the costs in addition to the down payment. After hearing about all the costs, I'm like, well, I need to reduce that down payment. Let's talk a little bit about the different mortgage types. Brittany, can you break this down for me personally? Because I hear a lot about physician loans because I am a physician. And from my understanding, that's you can put down less than 20% and still not have to pay private mortgage insurance. But I'm just curious about other loan products that might be available to us.
Well, I don't know available to us.
It's that interesting dilemma of being stuck in the middle where you're not rich enough to not care about these costs, but you're not struggling enough to get all of these subsidies and help, which, rightfully so, probably we shouldn't have taxpayers paying to subsidize costs for people who can afford that. Another topic for another day. But I still would like a little assistance. Goodness gracious. All right. So tell us about what may be available.
One loan that I think people hear about often is the FHA loan. So that's a Federal Housing Administration loan. And my understanding of how this works is that the US government basically wanted to make home ownership more affordable, particularly for those individuals who wouldn't otherwise qualify. So people who have lower credit scores or those who may have a lower income. The FHA loan requires a lower down payment. Typically, it's about 3.5%. And then you have your typical conventional loan that can range significantly on how much you put down, but about 3 to 5%. Or if you put down more, 20% to avoid that PMI. We also talk about physician's loans. So each physician loan is going to be packaged differently. We've used physician's loans in the past. There are some physician's loans that require 0% down. There are other physician's loans that we've used that require 5%, 10%, 6.6%. It really depends on the type of loan and how much you're also borrowing. So, you mentioned 500,000 as a home purchase, which sounds extremely reasonable and out of reach for us here in Boston because home prices are much higher than that. But once you start to get up into the 1 to 2 million, they might require a little bit more down to secure that loan. And if you work for the VA, which I know many physicians do, you might want to explore VA loans as well, where they might offer some 0% options.
I was Googling as you were talking about this, but what it
Okay.
might be the case is that for those who have higher credit scores, maybe they could get a lower interest rate if they got a conventional loan or if they got some other loan product. And so I guess this kind of underscores the importance of kind of comparing and poses a question for me. When you were reaching out to the lenders to ask them about different loan products, do you reach out to the lender and say, what's your rate for a conventional loan, FHA loan, VA loan, physician's loan? Or do you just ask them what rates are available and they kind of give you the answers based on these loan products?
Yeah, I think it would be worthwhile to ask him about the specific type of loan. I was specifically looking for a physician's loan, so that's what I put in the email. But asking them their options, especially if you know that you might qualify for all of these things, then there's no harm in doing that to compare.
Okay. And then I heard about a first time home owners program. I don't know if that program has an income limit. But I wondered, if you're buying a home with someone who already has a home, like, does that prevent you from qualifying for some of these products? Like, I know for a physician loan, I don't think both people on the mortgage have to be physicians. I think it's just one. But I was kind of wondering about any of these nuances that we should be aware of.
Yeah, for the first time home buyers loan, I would have to look into the specifics of that. But if you were hoping to use that loan, at least from my understanding, if you have someone else who is going to be on the loan with you and they've previously purchased a home, then you probably wouldn't qualify. So if that is the approach that you want to take, then you will want to keep it separate. Apply for a loan just with you and use that first time homeowners benefit.
Okay. I'm curious about interest rates. This is an interesting climate that we're in right now where interest rates are still relatively high compared to what they were in recent history in the early 2020s, but they're not higher than they were, in the 1970s, 1980s, that kind of thing. So, but just wondering about in this interest rate and climate, like, are there different interest rates that we're getting? Do you recommend people kind of locking in an interest rate? I know that the interest rate we may be quoted probably depends on the terms of the mortgage, right? Are we keeping our mortgage for 30 years, 30-year fix versus variable versus an ARM? Like, Can you talk a little bit about the different mortgage products in terms of loan terms and interest rates?
Yes. So you're right. The interest rates will change depending on the loan product. In my experience, say if you're taking a 15-year or even an ARM, you can sometimes get a lower interest rate. So for our first property, we did a 10-year ARM, which basically means that after 10 years, it will go into an adjustable rate mortgage. And the rate adjustment frequency is different per loan. So that's something that you want to look into. In my experience, it has been like every 6 months or every year that they will adjust the rate based upon their mortgage rates. So that is an adjustable rate mortgage. And with that, we were able to get a lower interest rates on our first home. And then you will have like your 15-year or 30-year fixed. And usually the 15-year has a lower interest rate compared to the 30-year just because you have a truncated amount of time. And so less risk, of course, to the mortgage company if you are required to pay that loan back in a shorter amount of time. The mortgage amounts that you will have to pay, of course, if it's going to be a shorter term versus a longer term, the shorter term is going to be higher than the longer term mortgage. But that is my understanding and experience, honestly, when asking them about all of the different products that they have.
I know that people can be a little apprehensive with purchasing a home given this current interest rate environment. I've heard that term, you marry the home and you date the mortgage or whatever it is, basically encouraging folks that they can refinance their home at a later date for a lower interest rate if one should, or if the rates drop. I just wondered like your thoughts on this. I know you've refinanced your home before, but if you were ready to buy a home, would the interest rate kind of deter you from doing so?
The interest rates definitely can deter you from doing so because with this current climate, there is a shortage of homes on the market, which also drives up the cost of the homes. So homes are more expensive, there are fewer homes, and the interest rates are higher, right? And so when you think about the mortgage, the amount that you're going to have to pay every single month, it is dramatically dependent upon that interest rate. So if you are looking at your mortgage right now at the current interest rates and you're like, okay, I cannot afford this, then you probably should not purchase a home. If you're like, I can afford this with some sacrifices, then I would also say that you probably should not purchase a home just in case the economic climate changes because those sacrifices will no longer be sacrifices in the future if expenses and other things go up. For us, the mortgage is higher because of the higher interest rate. We had some margin within our budget, and there could be opportunities for us to either refinance or to adjust the mortgage. That's why it was really, really important for me to find a lender who had this established or at least idea for potential future programming to have this mortgage rate adjustment program built in because I knew that interest rates were high now with the expectation and the hope that they would drop later and I could decrease our monthly mortgage payments. So the mortgage rates, the interest rates right now are really high, and it's really important that you consider them in this cost calculation and doing a full appraisal of what your spending plan looks like and what your margins are.
Okay, I think you had mentioned this before, Brittany, about buying down your rate. Can you talk a little bit about that process, how much it costs, and whether or not, how do people figure out if it's worth it?
When I think about this, and Lisa, you feel free to share your expertise on this topic as well. But when I think about buying down your rate, I think about, okay, you are paying essentially a fee right now to decrease your rate by a certain percentage. So typically you can buy what they call points up front. And usually it's 1 point will equal to about 1% of the loan amount. Okay. So if you're taking out a $100,000 loan and you purchase 1 point, then you will have to pay $1,000 for that 1 point. And each point typically lowers your rate about 0.25%. But this is something to ask the lender, right? So now it's taking your interest rate from about 6.25% to maybe 6%. So you got to evaluate the cost of doing that. What would your mortgage be if you went down by that 0.25% each month? Because for us, it did not make sense for us to pay for points to buy down our rate when I knew that we wanted to refinance the loan. right? And I knew that if I was able to do that, then I would be paying more money up front to not have much money on the back end because I expected that interest rates were going to change. So it's like, do you want to pay all this money up front to lower your rate? Or do you just want to kind of wait it out, refinance, and then be able to lower your rate later? And so it's like a definite cost versus a potential cost. And for me, I was like, okay, I'm hopeful about the future. So I don't want to pay this definite cost when I may not be able to actually benefit from that cost. And that served to be very true for us because we purchased the home and then we were able to refinance the home and bring down our interest rate by 0.7% with refinancing. So it's like, why would I pay to buy down the rate when I know that I'm going to refinance or when I have this expectation that it's going to be lower? So that's kind of the calculus to think about. And honestly, I don't know, for some, just changing by 0.25% would honestly be worth it. But again, it depends on the situation, and you also have to do the numbers.
Okay, so what I hear you saying is that the purpose of buying down the rate by using points, right? You're buying points to reduce the interest rate is that it could reduce your monthly payment by a good amount. Because if you're someone who's thinking about staying in your home for the long term, you don't want to have to be dependent on refinancing your loan. You can just lower your interest rate by buying points. And so that seems like a good option. For other folks, such as yourself, where you said, I'm not sure if I'm going to be in a home forever, but I am hopeful that interest rates are going to reduce on their own. And so I'm hopeful that I can refinance. And if I refinance, then I don't need to buy down my rate with points because I can just refinance the interest rate and get a lower rate that way. And so it seems like it depends on how easy it might be for you to refinance, how costly it might be for you to refinance, and how much faith you have in the future that rates are going to drop soon enough that it's going to make it worth your while. So it's a little bit of a guessing game, it seems. Seems like you chose right.
Yeah, because we never know what the future is going to hold, right? But I think part of it is you just want to figure out that break even analysis. So, like, if I have to pay $7,000 right now, what is the difference of the savings on the mortgage rate that's going to equate to $7,000? And so if that's going to be 3 years, then yeah, I'm just going to wait because maybe I'm not even going to be in this home for 3 years, if you don't want to stay in the home or if you expect that things are going to get better. So really looking at the time that it will take for you to make up the upfront cost, and if that timeline doesn't fit with your projected timeline, then it's probably not worth it.
Okay. So we've talked a little bit about getting a pre approval, which you said was a pretty easy process, finding a lender, shopping around, figuring out a lender that works for you, asking them about different mortgage products, interest rates, loan terms, whether or not they sell the mortgage, getting a feel for their customer service. We've talked about all of those things. Now I kind of want to transition just a little bit into real estate agents and finding an agent that can help you actually purchase a home. I think it was at the end of last year, they had that new legislation that says, hey, it shouldn't be that the seller of the home is responsible for the full 6% real estate agent costs. It should be that the seller pays for their own agent and the buyer pays for their own agent. I've listened to recent podcasts saying that that is not the case, that these agents have gotten really savvy, and it still seems to be the case that the seller is still paying for their real estate agent's fees along with the buyer's real estate agent fees. So for those who've never purchased a home, you typically work with a real estate agent. That agent is not working for free. So somebody is paying that agent, and typically it is the seller of the home. So if you're the buyer, you're usually not paying for your agent's fees. The seller of the home is. So my question to you, Brittany, is that how it is still working? Were you able to negotiate fees? If you're the buyer now, should we expect to be paying for our own real estate agent? Like, I'm just curious about how this whole process works now.
So that legislation came out after we purchased our home. So I can't say with any experience, but from my understanding of talking to an agent recently, because I was considering selling our real estate property, that regulation, at least here where we are, has been put in place. So as a seller, I would expect to pay about 2.5% or 3% of the purchase price in commissions to my seller's agent. And then the buyer would pay about 2.5 to 3% of the purchase price to their agent. So that's my understanding of how it would potentially work based upon a conversation that I've had with our real estate agent about selling our real estate property. We chose not to sell it. We're going to rent it out again. But, I have had that conversation recently. And with finding a real estate agent, probably word of mouth is one of the best approaches in this case, right? You want to make sure you know somebody who you love and you trust, and then they tell you how great their real estate agent was. With a real estate agent, because they're being paid on commissions and also the purchase price, there are some conflicts of interest there. And so that is really important that you know how much you're going to pay them in commissions depending on that price. So you want someone who feels honest, but also knowing that they have some bias. And you want someone who's going to ask for all the things to help you to figure out what you should be asking for, to point out things as well regarding the property fixes, asking how you can negotiate, and someone who communicates well because there's a lot of timelines and deadlines. And honestly, that's what makes the home purchasing process more stressful is like the timelines. And there are set timelines that your real estate agent has to adhere to. So getting those documents and doing all the things ahead of time is really, really important. So I think word of mouth is probably the best approach, asking how they communicate, asking for like the last deal that they made and how they were able to advocate for the buyer or the seller in that deal. I think would be some of the preliminary questions that I would ask. And then I would go out with them and say, hey, can we spend some time just like looking at a property either online, having them send you something, or going out and seeing a property together to feel like how it is working with them?
How long did it take you to find your property? I'm just thinking nowadays because, I mean, the market is different, right? I know before maybe it was a buyer's market and there were a lot of homes for sale, and it was pretty easy for people to find properties that they liked and pay a decent price for them. Now, that may not be the case depending on what area you live in, right? Where maybe there are fewer homes up for sale. And so it may take you a little bit longer to find a home that you like. And then you're maybe in a bidding war with somebody else where you may be in a situation where you are tempted to overpay for the home just to secure it. So I just wondered if you had any tips for actually like finding and securing a home that you are happy with.
I have some tips, but our home purchase experience, I think, has been different than most people's. We've been truly blessed by purchasing both of our properties off market. There's no competition, no bidding. And the first property that we purchased, we lived in as tenant, and the landlord wanted to sell. And we said, hey, we want to stay. So, how can we make this work for both of us? And in that case, we just required a real estate attorney. We didn't need a real estate agent. For our second property, I had engaged this real estate agent who had helped us before with some other ideas. And she took me to see one property, and it just required a ton of work. It required a ton of work. And I'm like, okay, one, the purchase price is high. And then I have to put 40, 50,000 in. And I don't know if after I open up a wall, how much I'll be able to add. So that property didn't work. But she said, there's this one property that was listed that went off market. Maybe they would be interested to sell to you again. So it was not currently listed when we purchased it, but it had been listed 2 years prior. So she reached out to that agent and they reached out to the homeowner and they sold the property to us. So that's one of the things, like your real estate agent has to have experience. They have to be willing to do like these off market deals and be very creative. And that will help to truncate the time that it will take to purchase a home. And if your real estate agent doesn't have that grit, if they're not willing to like send out letters, like she was even willing to send out a letter to a homeowner who we liked the property that had not been listed to say, hey, I have some clients who are interested in this property. Would you be willing to sell? So for us, I think our experience is very different. However, I have my current tenant who's looking for a home here in Boston, and there are just few homes on the market and they're very expensive. So they had to go almost 30 minutes outside of the city in order to find a home. So you got to be patient and you may have to be willing to give on something.
Interesting. Okay. 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 You mentioned that the pre approval is pretty streamlined. Let's say you found a home that you like. Is actually like securing the loan as streamlined, or does that take a little bit of time? I'm curious about the process once you found a home, how long it takes to actually get into the home and secure it.
Yeah, securing a loan takes more time because it has to go through underwriting. You first have to get all those documents, submit all those documents, then you have a preliminary administrator who's assigned to reviewing everything, making sure that you've uploaded the right stuff and asking for any additional details. And then they will submit it for underwriting. And then after it goes for underwriting, they may ask you more questions. You have to upload more documents and send more emails. So it takes time to secure the loan. What is really important is that you keep everybody in the loop. So our real estate attorney knew our real estate agent, and then I connected them with the lender. And so they were all in the email together, kind of working together about what documents were needed, when we needed that loan approved, what is the likelihood. So it's like, yes, it is an underwriting. We expect that it will be done next week, but the probability of this loan being denied is very low. So I would recommend that you all continue with the other phases of the process. The mortgage company also needs to send out an appraiser. So that takes a little bit of time as well. You want to make sure that the amount of the loan loan that you're asking for or the value of the home, purchase price of the home, it actually appraises for that amount or more. If not, then the lender might not give you the full amount of your loan if it appraises for less. So thankfully, we didn't have to go through that process with it being under appraised. We had no real hiccups with the loan. The one thing that I would say is you mentioned locking in your rate. You do want to try for a rate lock. There are different durations of the rate lock: 30 days, 60 days, 90 days. And the longer you lock the rate, the higher it's going to be. So sometimes they charge a fee for these extended rate locks, and you need to close on the home before your rate lock expires. So that was one thing that kind of came into play for us. The bank took a little bit longer than they should have. And so we were scrambling to try to get and sign all of the documents to close on the home before the rate lock expires. Definitely budget in some time before your rate lock expires to ensure that you have that closing date. And then the only other thing that I would add about that with the rate lock is you want to ask companies, do they have a float down process? So essentially, like if you lock the rate and say the rate is 6.75%, then if they allow for a float down, it allows for you to kind of monitor what their rates are. And if the current rate, not the rate that you locked in, but the current rate is 0.25% or lower for most lenders, then they can change your locked rate to the lower rate. So if it goes from 6.75 to 6.5, then you can say, hey, can you lock me in at the 6.5 rate instead? And they usually will allow you to do that until your rate lock expires or your closing date. They will allow you to adjust the rate. So that's one thing that I forgot to mention that was really important in that initial email.
This is a lot of information, but I think it's helpful for those like me who maybe haven't purchased a home, or maybe people have purchased a home and it's been a while for them. They're thinking about selling and getting something new, or just maybe they have friends who are navigating the process and their friends are asking advice. Like I've asked my friends for advice and I've heard it's expensive, you need a lot of money, that sort of thing. So I think, in a follow-up episode, we'll kind of talk about how much mortgage can you afford? Because I get that question a lot. Folks asking me, how much mortgage maybe should you afford? And considering all the costs, how does it factor into your budget and your monthly spending plan or some of your other financial priorities? So we'll delve into that a little bit later. But thank you for all of this information. It still feels daunting to me, I gotta say. I thought with more information, I'd feel at peace and relieved, but that is not the case right now.
Yeah, it is interesting and it is a lot of information. It's a whole process, but your real estate agent is the person who's supposed to be helping you to navigate this, right? So I think making sure that you test them out, you try them out, you speak with them, you go on like a sample run with them is really, really important because they guide you through a lot of this process as well as your real estate attorney. And that's one of the reasons why I wanted to use my own real estate attorney and not the bank's assigned real estate attorney, right? So those two players can make or break this process.
Okay, so more emphasis on me making a good decision from a real estate agent perspective, but I think that's helpful. So we'll pause there, I guess, on some of the home buying stuff. And I'm curious. So now it gives me a chance to be a little bit nosy. Aside from navigating things with your home, Brittany, what are you spending money on? What's your fun money?
Yeah, so I recently presented at the Society of Hospital Medicine conference, and I realized that I had been wearing the same dresses every time that I had presented, right? I would always wear this hand-me-down, a blue dress that I love so much, but it was time for me to spend on some new attire for my presentation. So I bought this dress from Macy's. I think it's Donna Karen. And Leisha, like when I picked it up, the weight on the dress was like heavy. So I'm like, okay, this is my type of dress because light dresses work, but the weight I think really helps you to understand the quality of the fabric. And it was a new style that I didn't have in my closet. It was a color that was flattering and then the fit looks great. So I spent about $180 or, a little bit more with tax on a new dress that I love so much.
I'm happy for you. I'm happy for you. I am a little bit frugal in that department. So I don't typically buy like $200-$300 dresses, but maybe I should because your clothes always look so great. So I'm like, oh, that's the difference. Just quality material and like good fabric. Oh, okay. Maybe I should, stop shopping for, all these random discounts and get and invest in some quality pieces. So I'm happy for you. I might have to follow your footsteps.
Thank you. Yes, because I think about the price that you pay, price versus cost, right? If I had to buy a new dress every couple of months, then I'm actually paying more for the dress. But because I paid this $200 today, and typically my dresses can last me about 5 years, right? And so if I could get 5 good years out of this dress, then that's worthwhile.
Got it. All right. All right. It's going to take me a little minute to rectify that in my mind. Like, okay, instead of buying, four dresses for $200, you're going to buy one, but it's going to be quality piece. I'm happy that you looked great and that you're able to splurge on yourself.
Thank you.
For my fun money, we're recording this in May. May is always a tough financial time for me because usually it's a time I'm planning my own vacations, but May is also both of my brother's birthdays. It's Mother's Day. So I'm always buying a lot of gifts around this time. And that was the case this weekend. I spent so much money buying my brother's gifts and figuring out what we were going to get my mom for Mother's Day. And I'm like, whoa, we got graduations. And I'm like, oh Lord, I need a savings fund just for the month of May. But I'm happy that I was able to spend some money on my family members. I take pride in buying good gifts, buying them things that maybe they wouldn't purchase on their own, but that they would use and enjoy. And so, yeah, that's how I'm spending my fun money, buying gifts for the fam.
Okay, I'm curious because you know my dilemma. I am not a gift giver. So what did you get your mama?
Some jewelry, some jewelry. She
Okay.
actually wanted jewelry. She wanted
Okay.
like new necklaces. I was actually going to buy her a ring, not a wedding ring. Of course, she's still married to my dad, but she doesn't really wear her wedding ring that much, not like the big stone. And so I was like, oh, it'd be so cute to like matching rings, her daughter, like mommy and me, sort of thing. But she really wanted a necklace. And so got her like this really cute necklace with like this charm that I think she's gonna love and enjoy. And so for my mom, it's pretty easy. My mom's the kind of person, you ask her what you want, she's gonna tell you, I want this. And so that was pretty easy. I knew she wanted a necklace. I picked one that she would like. My brothers are getting older. My oldest brother's turning 40. And I thought, ooh, okay. Things are starting to ache. He's not in the gym as much as he used to be. And so actually I bought him this massager. Think of a massage gun that you would see a physical therapist have. It's got all these different parts that you can put on for different kinds of massages. You can massage, like your back or your, legs or your feet or whatever. The cool thing that I liked about this is that it's not only a massager, but it also had heat and cooling. And so you can turn on the heat property. It's a little heat there, turn on the cooling property. And I thought, okay, this is a good gift for my brothers that like to pretend that they're as active as they used to be, but maintain their gym memberships. One of my brothers also works in a gym. So it's just, I think it would be a great gift and something that I don't think they currently have. And so bought them these massagers, super fancy, all the different parts and all the different things, but hopefully they'll like it.
You're so much better than me. My brother's birthday is on the same day as KJ's, and I'm going to send him a happy birthday text. No, I'm going to call him. I'm going to call him. But we don't really give gifts. That's not our love language for a family. We're more of an acts of service type of love language. But I'm happy for you, and I'm going to think about what I can get my mom, given that it is Sunday for Mother's Day. So happy Mother's Day to all of the mamas listening to this, or happy belated Mother's Day. We appreciate you, and we thank you all for listening. If you are looking to negotiate, then make sure you click the link in the show notes to check out our Negotiate Like a Boss Accelerator, and we will see you all next week. Hello, and thank you for listening to our podcast. And because of that, we have something for you, our Wealthy Minds Blueprint.
Have you ever thought to yourself, I wish I could be better with money? Do you want to start investing and saving for retirement, but keep delaying because you don't know where to start? Our Wealthy Minds Blueprint is here to help.
This guide will teach you what you didn't learn in your training, so you can stop being confused about money and start taking what we call wealthy-minded action.
We'll help you become a master of your finances and simplify investing so you can get started today. Take control of your financial future by downloading your free copy of the Wealthy Minds Blueprint now and start building the wealth you deserve.
One of the most important things you can do is ensure you have long-term disability insurance. Long-term disability insurance secures your income if the unexpected happens and you are unable to work due to medical illness, chronic conditions, or an accident.
Unfortunately, all insurance agents aren't created equal. Some of them are so focused on making a sale that they fail to reveal certain necessary information, tell you about discounts available, or clearly explain the process. Prati Botto and his team at PKA Insurance Group are different. They have a reputation of putting people over profits and always doing what's best.
If you need life insurance or disability insurance, reach out to Pradeep and his team today. They will help you get the insurance you need with the service you deserve.
Hello, everybody. It's me, Brooke. I'm recording a little disclaimer for my mommy, Dr. Brittany Halford, and her friend, Dr. Lisa Taylor. Just so you know, they're not financial advisors, tax professionals, lawyers, or financial planners. Everything you hear is for education and entertainment. It's not strict financial advice, So use your best judgment. Chat with a tax professional and all those other people that you need to talk to. Thanks for tuning in today. Keep cruising on your journey to wealth and wellness. Bye-bye.